Real estate right now is not that fun. I'll be honest with you. I'm sitting on a rock, looking at deal after deal that suck. It's not that fun. I'll be honest with you when I say that the real estate market sucks right now. Rates aren't going down in the near term, and cap rates haven't fallen enough to make buying make sense. We have negative leverage in the marketplace, which means every dollar of debt you borrow, your cash on cash drops because your debt is more expensive than your cap rate. Your debt is more expensive on a dollar for dollar basis than the yield produced on a dollar for dollar basis, meaning if you're borrowing at 6.5%, your debt yield, your all-in, or your debt constant, your all-in cost on debt is going to be, on a 25 or 30-year AM, it's going to be 8%. So if you're borrowing at 6.5%, your debt constant is 8%, and you're buying a 6 cap, every dollar of debt's costing you 8%. The property's only generating 6%. If you're half levered, you're going to have a 4% cash on cash. If you're 100% levered, you're going to have a negative cash on cash. You can't go that high of leverage. Cap rates have not eased up. Maybe a little bit. I mean, some deals are sitting on the market. Big portfolios are sitting on the market, not selling. A lot of retrading happening under the, behind the scenes. The real estate market's in chaos. Debt brokers are trying to get deals done. Brokers' volume is way down. They're selling way less storage right now. And acquisition teams and buyers like me are just not able to buy as much, mainly because sellers' expectations have not corrected. Sellers still think that they can get prices like they could get 6 months ago when rates were 3.5%. Now they're 6.5%. They want the same price. It's not happening. And also there are a lot of buyers who are biting and making it happen and stretching for deals. I don't know if these other buyers are stretching for deals because they know something that I don't know, or they're willing to take more risk than I'm willing to take. But the bottom line is that me and my team and my investors, we made a lot of money over the last 24 months. We bought $50 million worth of storage last year. It's all done really well. We're already recapping a lot of it. And we've made a lot of money. Life-changing money, generational wealth for me and my partners and our investors. That has caused me to have a little bit of a risk-off attitude right now. Why would I get greedy? Why would I do deals to do deals? Why would I stretch and take unseen and undue risk on acquisitions right now? There's a lot more for me to lose if I lose investor money than gain if a deal goes as projected. So we're being very careful, but it's been super, super frustrating because our acquisitions team is beefed up, stronger than it's ever been. We have 4 full-time cold callers. We're spending at least $500,000, probably more like $1 million a year on all of our acquisition payroll, acquisition tools, acquisition software. So we're investing heavily and we're going to buy less than last year. If you'd asked me last year how much storage we'd buy this year, I would have said $100 million and I would have put money on it. We're going to buy less than 50, which is less than last year. We bought $50 million last year. We're going to buy about 42 this year. And that's not very much. It's frustrating, but look, this is the way that it works. And a big question that I get often, especially on Twitter, is do you think that you, Nick, are impacting the market and making deals, the price go up because you're bringing in more sellers, you're teaching more people how to do storage? Possibly. I mean, there's a chance, of course. And I think there's definitely more competition on smaller LoopNet self-storage facilities under 15,000 square feet because of me. But the people who are buying the deals that I'm looking at, the $10 to $20 million deals, the $5 million plus deals, they're not new in the storage game. They're folks who have been buying and operating storage for a long time. So do I think I've really impacted the way they think about storage? I doubt it. I don't think I've moved the market much. And if I have, so be it. But here we are, and I'm sitting on my hands. I'm bored. I'm looking at deals that I probably shouldn't do and not doing them. We're just staying disciplined. So I think it's just not a good time to buy a bunch of real estate. I think as the interest rates go up and as they stay up, the Fed's going to pop rates again. If you're listening to this on Wednesday, the Feds are going to pop rates again here, 75 or 100 basis points. And this stuff is starting to hurt. I mean, we locked in our entire portfolio at 5.9% interest. If we did that today, a month later, it's 6.67% interest. Borrowing from local banks, 6.5% interest rates right now. This is just insane when 8 months ago, it was 3.5%. So here we are. I think some pain is definitely headed to the real estate market. I'm a bear. I think prices are going to relax. We're sitting on our hands right now. We're being patient. And honestly, it's giving us a really good opportunity to work hard on our management. We're managing 54 properties. We're closing on 3 self-storage facilities in Virginia today. It's not as easy as I make it sound to manage 10,000 tenants and 1.5 million square feet of storage. So we welcome an opportunity to step back and work on our operations and hire where we need to hire and train where we need to train and get better and better and better. We're also investing in building out some of our facilities that have extra space to build. We're going to expand. We're going to grow in that area. So yeah, that's what we got. I mean, we're sitting on our hands a little bit, and that's the way real estate is. You can't just be buying aggressively all the time. I mean, good shops do. Good shops find a way to buy, and we're finding a way to buy. We're buying a little bit, but we're not buying a lot. That's just part of it. Now, we got to also talk about the Extra Space Storage deal. Extra Space Storage acquired Storage Express, which is a portfolio of remotely operated self-storage facilities in small towns and tertiary markets based in Bloomington, Indiana. This is a company that has they had at least 3 million square feet of storage. They were bought for $590 million. Bought their operation company with 50 plus employees out of Bloomington, Indiana. And they own a lot of small properties. They own a lot of small properties with kiosks. They own a lot of 15, 20,000 square foot properties, no full-time manager. To see an Extra Space Storage, which is a publicly traded REIT, to see them diving into this market is something that I said on this podcast a year ago, and I said on a panel at Reconvene, which is tomorrow in LA, and said, look, we're all banking on sometime in the next 10 years, I don't know when it's going to happen, a REIT will buy a portfolio of properties with good management. We don't know when. We don't know when it's going to be. We don't know how. But a REIT will buy it in the next 10 years. And here we are 1 year later. It happened. We've seen the great roll-up of, mom and pop facilities. Why did it happen? What does it mean? I think it's clear. I mean, these REITs are looking for areas to deploy capital. They need to buy storage. They do it every year. Their stock prices go up when they're able to find more storage to buy and ways to grow. Now, there's 5 main REITs all competing with each other to buy storage in big cities. Class A facilities with on-site management. And there's only so much to buy. You can't go around and buy when everybody else is trying to do the same thing. And there's only so much storage that's being built. And there's only so much storage that these markets can actually withstand. So to see them go out and buy a operator like me, which we actually modeled our business off of, our original pitch deck to our very first investors back in 2017, the very first page had Storage Express on it. We're modeling after this company. It's good news. It's exciting. It's exciting to see the REITs go downstream. It's exciting to see them start in that area. And it's only a matter of time until Public Storage, CubeSmart, Life Storage, they need to keep up. They need to make an acquisition to keep up. So the people who are rolling up storage and own over 1 million square feet are in a really good spot. We're one of those people. We have 1.5 million square feet of storage. It's good. We're going to hold on. We're going to manage them well. We're going to expand them. And this is all really, really good stuff, which we are excited about. So that's that. Hope you all enjoyed the episode. And yeah, real estate right now is not that fun. I'll be honest with you. I'm sitting on a rock, looking at deal after deal that suck. It's not that fun. It's not that fun for our acquisitions guys. They're struggling, but they're being patient. They realize that it's feast or famine in our business. They're building relationships. So that's where we are. Thanks for listening.
Juniper Square, the sponsor of this show, recently conducted some research to help you understand what real estate investment managers are doing to build stronger relationships with their investors and earn more referrals to new investors. Their new special report includes data on topics such as what factors are the most important for building investment relationships today, how technology is being used to provide a competitive edge, and the one technology integration that is driving more repeat investors and more referrals. To download this for free, visit junipersquareresearch.com. Again, to get this report for free, visit junipersquareresearch.com. I just wanted to let you know that we have a paid real estate community with over 500 members. Not many people know about this. It's on Facebook. It's an inside look into my business and many other business. It's skewed towards self-storage, but there's also a lot of other commercial real estate investors in the group. We're pinging ideas off of each other. It's just where I share a lot more intimate details about my business than what I share on Twitter or on this podcast. So if you're interested in this and you want to meet other people,
There's been people invest in each other's deals on there. There's been people share deals that other people bought. It's a place where a lot of cool stuff is happening. If you're interested in this, visit sweatystartup.com/REC, as in real estate community. sweatystartup.com/REC. There's a free trial as well. You can check it out for a week for $1.